Good afternoon or good day, students. Alright, so just a reminder, just to say that we are looking at step one, determining fixed costs. In determining fixed costs, you're looking at the cost for employees, the cost for wages. Alright, wages are fixed costs. We're looking at marketing supplies, and we're looking at other things such as items that could fall under it, such as rent, marketing expenses, and equipment. All right, but some of those are not present for this calculation. But what we have is that we have wages, we have marketing supplies, and so we're going to be looking at those and adding them together. Now, in column 2, you'll notice that I have time times people multiplied by rate of pay. Now, the time is 11 meetings and it's 1 hour per meeting, and it's $50 per employee, and it's 10 employees. That's for A. That's the A row, right? Now, 10 times, which is the 10 employees, multiplied by the time, which is 11 hours for the 11 meetings, multiplied by the $50, which is the rate of pay, you get $5,500. $1,100 per officer for the B, for B row. It's 11 hours multiplied by 10 VPs, and it's $60 per VP. All right, now $60 per VP means that the total cost is going to be $6,600. And then the marketing supplies is $2,000. Remember, marketing supplies is that, or marketing expenses, whether it's expenses or supply, it is those expenses that are not going to be changing. So they are not changing because they are expenses that are related to marketing. All right, and so all those will be added to give you a total of 14,100. Now the next thing is step 2, we're going to be determining the variable cost. Now, to determine the variable cost, you're going to be looking at the projected total cost of materials, which is $2,000. All right, so we have set out a projected cost of $2,000 and divide it by the number of units that you're expecting to create or to make. Now, if we say that we're going to be making 100 units of the product and we project the cost to be $2,000 in total, it means that the unit or the material cost per unit is $20 because it's $2,000 divided by 100. So if you get 2,000 divided by 100, you are going to get 20. Okay? So that is the material cost per unit, and you're going to need it again because you're going to need it to take it away from, you are going to need it to take it away from the estimated prices that we will be looking at the next step. Remember, you're going to have two estimated prices, two sample prices, and then you're going to need to take away the commission as well as the material cost per unit. And material cost per unit is not going to be changing. It will be one cost for each price, just the same $20. However, commission will change. So we'll look now at that. Step 3. Alright, so at sample price number 1, it's $500. Sample price number 2, it's $600. So all this sample price is saying is that the price that you are planning to charge the individuals is $500 or $600. So we're really going to look at which one can work, all right, effectively. So at $600, you're going to see if after we have taken out commission and material cost per unit, whatever is left, if that is okay, if that is going to be fine. So so in doing the market research, you would say, okay, the price is $600. Are you willing to buy? Or you say the price is $500. Are you willing to buy? Now, if you tell them that the price is $600 and they are excited about the product and still want to buy, then you know that the gross profit is going to be $520. And you say, okay, then we can deal with that. If, however, you realize that persons are not willing to pay the $600, then you would have to reduce it and to say, okay, are you willing to pay $500? If they say yes, then you know that the sales commission, which is 10%, is $50, and the material cost would have been $20. And then the gross profit that you'll be earning is $430. Okay, now moving along, we are going to be at the final step. The final step, which is the easiest part of it. You're going to look at the fixed cost. And remember, the fixed cost was calculated already at step 1. So it means that you do not have to work anything out. So at first price, remember it is going to be sample price 1 and sample price 2. And then you're going to look at the break-even point in units. So in determining break-even point in units, it means that all you need to do is to look at the fixed cost and divide it by the profit to find out what is happening, at what point will we not be making a profit or a loss. Remember, break-even point is that point at which you are neither making a profit or a loss. So at $430, where will we, what units, how much should we be producing in order to break even? It means that at the point where you're producing 33 units, it means that the company is not going to be making a profit or a loss, right? Anything above that or below that will mean that there will be a profit or a loss. So it is highly likely that producing lower than that will be a loss, and producing more would mean profit. So at $430, you need to be above 33 units in order to make a profit, because you'll only be breaking even. At $520, which is more, you will need to be, the break-even point is lower. It's at 27 units. So you realize that you're going to be getting more profit. To get more profit, 27, the gross profit of $520, if you're selling at $520, you would be able to break even at 27 units, which means that below the 27 units, you will be making a loss. All right, but above the 27 units, you will be making a profit, and that is how we'll be calculating it. So let us get to it. It is very easy. You just need to be focused. All right.